Hello everybody, good morning from London. Welcome to the Like Totas channel. Once again, I hope you all had an amazing weekend, and I'm just recording this video to give you some updates on the markets. Of course, I'm recording this at half past 8 London time, which means that the US market hasn't opened yet. Of course, it will only open around half past 2 London time, but we are already seeing the futures pointing lower. So the Nasdaq, as you can see, I'm just sharing my screen. Let me minimize this. The Nasdaq is down minus 1.27%, which is not that much, but it's going to be very interesting to see what's going to happen as we move along the day. Okay. So, and you can see that a lot of those fears are directly tied to the oil price performance. In man, is oil moving higher? Look at that. We are already trading above $100 per barrel, which is insane. At one point, this thing was all the way up to $115 a barrel, and you can see that all of this happening just ever since the war broke out, right? In the Middle East between the US and Iran. And this is causing massive disruption in the commodity space. And in oil, as you know, moves everything. And so part of the reason why I wanted to put out this video is because I just created a post right here in our school community, and man, we are growing. Look at that, already 60 members. You know, just a few weeks ago, we were down to 30 people. Now we have almost 60 people. Many of you have joined us directly from YouTube. So I'm so grateful that you guys are finding the content helpful, and hopefully this what we are building right here is going to allow you to make much better investment decisions going forward and making a lot of money, because that's exactly what we, like Tortoise investors, want to achieve, right? Okay, so as you can see, I put this out right here, and you can see this essentially sheds light on how oil can actually move the stock market. You can see that oil has now moved above $100 per barrel following the escalation of conflict between the US and Iran in the Middle East. When oil approaches this level, everybody, this is important, the impact tends to ripple through the entire US economy and therefore through the stock market. That's why equity markets often react quickly, and that's part of the reason why we are seeing downward pressure today. Here's the simple chain reaction. I will just keep this short so you guys can understand. But higher costs for businesses, right? Oil is a key input across the economy. It affects everything from transport, logistics, manufacturing, and so on. So when it rises sharply, many companies face high operating costs, and that's part of the bearish thesis going forward, right? If oil sustains these levels for a long period of time, that is a big red flag. So, in the ideal scenario will be for us to see a resolution to this conflict as soon as possible. But let's see what's going to happen. Okay. So also look at that pressure on inflation. This is again very important, right? Pressure on inflation. Energy is a major component of inflation. So when oil prices rise, petrol, diesel, everything costs all these and shipping costs all increase. The higher costs eventually feed into the price of goods across the economy, raising concerns that inflation may remain higher for longer. Everybody, what are we seeing across the world is central banks have begun easing, right? In the United States is certainly no exception, even though they started the easing cycle much later than other central banks. But we know that central bank in US are cutting interest rates. But what will happen if inflationary pressures persist to the upside? What's going to happen, right? If going forward we start seeing the key inflation indicators in United States moving upwards, that will cause the Fed to be actually backed into a corner, because if they cut interest rates, they risk inflation going out of control, right? But if they keep interest rates higher for longer, businesses will continue to be under a significant strain, right? Because borrowing costs remain elevated. So It's a dichotomy that they are facing right now. In interest rate expectations shift if inflation rises because of energy prices. Uh, we just touch upon that. Central banks such as the Federal Reserve or the European Central Bank may delay interest rate cuts or keep rates higher for longer. This reduces company valuations and can slow economic growth, both of which can weigh on stock markets. Part of the reason we saw indices going up, right, ever since the easing cycle was announced, is because market participants were now pricing in lower interest rates, so the cost of money comes down, and that can justify higher valuations. What happens if that goes to waste? That's a problem. Consumers have less money to spend. When households spend more on fuel and eating, they usually cut spending elsewhere, right? So, for example, they start cutting back on discretionary items, retail, travel, hospitality. Discretionary industries are often the first to feel this pressure. So markets quickly price in the possibility of weaker consumer demand. And let's not forget that right, the consumer sentiment is currently near all-time lows, which is insane. So you would have to go back to it's even at a lower level than what it was back in the 2008 financial crisis. That tells you something, right? Geopolitical risk increases. Oil often spike on the back of geopolitical tensions, which is what we are witnessing right now. Financial markets generally dislike uncertainty. Of course, during these periods, investors sometimes shift capital toward perceived safer assets such as government bonds or gold. Going back to the to our eToro account right here. For those of you who are new to the channel, remember that we use eToro only for educational purposes, but we execute all of our transactions on interactive brokers. And going back right here, you can see that even silver didn't take a beat this morning, right? So precious metals are actually under some pressure. But what is definitely rising is the dollar. If I go right here, the dollar is up almost 0.80%, as you can see. And look at that. Dollar has been going up since the outbreak of the Iran war, and that makes sense, right? Because the dollar, which has been under a lot of selling pressure, is seen as is perceived as a safe haven. To me, this is just nonsense, because it's a currency that has depreciated so much over the last decades, and it will continue to depreciate, especially as banks begin the easing cycle, whether that is now or in just a few years. I don't know. But yeah, so I hope that was clear. And you, of course, look at energy prices, net gas exploding, oil exploding this morning. So I'm very interested to see what's going to happen at the US market open. Will the sell-off going to continue, or is this just a temporary setback? However, the title of this call is the next stock market, in my opinion, the next market crash will definitely make investors rich. What do I mean by that? I mean that at the time of great panic, this is where we, tortoise investors, can take a lot of, we can take advantage of that volatility, use it to our own benefit. As I already alluded to many times in several of my video channels, you guys know that it's in times of panic that we can take we can take more convinced bets. Okay, so the Nasdaq, for example, is already down about almost 9% from its all-time highs. This is not that significant, especially, in fact, if I go here to the S&P 500, which is down right now 1.24% today, but you can see that it's only down about 5% from its all-time highs, and the Shiller PE, right, is at about 39 times. So this remains one of the most expensive markets in history. The only time this was more expensive was back in the 2000 tech bubble, and we know what happened. I don't know if this is going to persist, of course, but we can see that this is happening at a time that the index remains very expensive, and of course we will see volatility. So even though the S&P is only down 5 to 6%, you guys know that many of its constituents are down by 50, 60, 70%. Okay, so the S&P is actually holding up pretty well, and this is because the S&P returns are largely driven by the Mac 7, and they have hold up pretty well. You can see, for example, that Apple, right, hasn't been that off its all-time highs. Look at that. Okay, you can see that Google, as another example, hasn't been that off its all-time highs. But if these things do continue to collapse, you will see significant downward pressure on the index. Okay, and make sure you have the highest quality companies that you can hardly find at attractive prices on your watch list, so you are ready for when the time comes and you have the firepower, right, the gunpowder to attack at when that opportunity arrives. Okay, and I think, look, I think very interesting companies are becoming cheaper by the week. Let's just put it that way. And yes, so I may pull the trigger on one or two of them going forward. As always, I will keep you guys posted. First clients, of course. And yeah, so if you like this video, guys, let me know how you are preparing for the next crash if it does happen. We are still away from it. It's just nothing. But let me know how you are preparing, and if you have built that watch list of significant companies that you are keeping a close eye on going forward. Okay, stay safe, everybody. Let's see what this brings. Hopefully, there will be a quick resolution to this conflict, because it's terrible for people that are living, especially in the Middle East. I certainly wouldn't want to be in their shoes. This is just horrible. But we also need to think about making money in providing for ourselves and our families. Okay, in these are the opportunities that we look for as Tortas investors, because the risk comes down with lower prices and not the other way around. Stay safe, everybody, and speak soon.